All right. Hello, everyone that's starting to join today's live. So you'll notice there's something a bit different on the screen here. So we have a pre-show quiz that's going to happen. So while we wait for a few people to join, what I'll do is I'll have a question come up in a minute. So you'll be able to leave a comment, whether you're on Facebook or whether you're over there on YouTube, and you'll be able to try and guess the answer. So can someone let me know if the audio and video is working? Because I am using the new webcam. I've got the mic here and we have got the quiz. So I've got a few different things going on here. So someone can just drop a comment and let me know that everything's working. You can hear me well, and I will get into the quiz, which is awesome. So I can see a comment there to say it is working. So let's see how this goes. And so here we go. So the quiz is going to be, which one of these was an actual claim a client tried to make? So I'm going to go off a bit of experience here of something that's actually happened to me. And so it's multiple choice. So we've got four different options here. So we've got a Lego set, a concert ticket, a fishing rod, or a wedding. So which one of these was an actual claim that a client tried to make? And so leave a comment in the YouTube or Facebook comments, and let's see who gets this right. And so, yeah, but while we're waiting for some comments to come through, I'll give you a bit of an overview of what's going to happen tonight. So tonight's main topic I'm going to be talking about is the crypto market in general, what's been happening there, and obviously talk about just general tax stuff, business stuff. So as always, leave your comments and I will get to them during the show. I've got a few questions that have been asked during the week. So as I say every week, if you've got questions, make sure you leave them on Instagram, on YouTube, and I will get to them either during the week or on the live show. So drop your questions. I can see a few people are answering. So we've got a few guesses here we've got a couple here of wedding. Actually, everyone's thinking the wedding one. So, which would be quite interesting with I've got a wedding coming up next year. So it'd be great if I could claim that on tax. Unfortunately not. So we've got three people there that have guessed wedding. So I'll leave it running for a little bit longer while we get into things. So what I'll do is, so I'll come back to that one, in the next 15 minutes or so once we get going. So I'll quickly talk about today's topic. So today's topic is going to be on the current state of the crypto market. So for those that don't know, the crypto market has dropped quite a bit over the last month or so. So you've probably heard quite a bit of talk about that. And you've probably heard, you'll get a lot of feedback from news articles, etc., going, oh, the market's dropped, people lost a lot of money. So what I'll do is I will hopefully, we might jump back into the quiz and get that sorted first, and then I'll jump into this. So sorry for a bit of its first time we're trying. So we'll jump back into the quiz, we'll quickly answer that, and then we'll go into the crypto stuff. So we'll go here, and so the answer was a concert ticket. So, I came across a client. It was quite in my earlier days of being an accountant, and I came across a client who had given me a lot of receipts, and, well, in the receipts was a ticket for a concert. So I'm going to hope that they weren't wanting to claim that and that was accidentally. I'll give them the benefit of the doubt because it definitely wasn't claimable. I'm pretty sure from memory their occupation was a truck driver, so I don't think there's any way to justify that as being a work-related expense. But yeah, they had tried to claim a concert ticket. So I quickly ignored that one because that clearly wasn't going to pass. Some of those other things on there. So I have seen an article from the ATO on some crazy different things that people have tried to claim. So there was a Lego set, I believe, that tried to be claimed by someone. And someone also did try and claim the cost of their children's wedding, I believe. So look, people can get very creative when it comes to tax deductions, as you can see from a few of those things. But they definitely, aren't claimable. So what I might do in a future episode is leave a video of some interesting tax claims from a few ATO articles I've read, and kind of then also give you some of the more bizarre things that actually were deductible, because there are some odd things that you'd go, oh, that's not claimable, and they actually turn out to be deductible in certain situations. So that's going to be. So I do like the comment here, roadie for a band. Well, yeah, that could be a way of looking at it. Not quite sure whether maybe you could say you were taking the band around and that's why you're using your truck, and maybe they could claim a truck driver rather than the other way around. But yeah, unfortunately, a concert ticket probably not going to happen. So I hope people have enjoyed the little quiz there. What I'll try and do is have something like that at the start of each week while we get started, just to have something more interaction. So anyway, now we can get into a bit of the topic we spoke about. So I'll talk about the state of the crypto market. So what I will do is trying to share again. So I'm playing around with this sharing a screen thing of the Bitcoin market over the last 30 days. So I think that's always a good spot to start and go, okay, so let's look at a month here. So you can see it was up quite high early in May here. So this is in US dollars, I believe. So we hit a peak of close to 60 grand. And then you can see a big drop off over a couple of weeks here. So you can see it dropped all the way down to here. I think we were at low, nearly 30 grand. So you can see when that kind of thing happens, obviously there's going to be a lot of communication in the media and obviously just amongst people, because people are always quick to jump on investments to do poorly, whether it's property, whether it's shares, whether it's cryptocurrency. People want to down it. Quite often, unfortunately, a lot of people have the mindset that they don't like seeing other people succeed, especially with things a bit more volatile. So people will be quick to down it and go, oh, look at that. Can you believe people lost all this money? So you can see that. But what is quite interesting, which I've seen a comment come through about it, is that, oh, it's bounced 20%. And if you have a look at the end of this graph here, you can see that the market has started to bounce back here. Now, this could drop further. I'm not saying it's going to continue to bounce back up, but we've gone here from those low 30s and we're now back sitting around just over the $40,000 US mark. So you can see there has been a bit of a bounce back. And I think that just shows how volatile crypto is. So that's something I really want to keep stressing to people, is that you're going to hear it more and more. And I think it's going to grow over the next few years, as people are going to go, oh, did you hear how much so-and-so made? Or did you see this person that become a millionaire overnight? Channel 9 on 60 Minutes a few weeks ago run a video talking about cryptocurrencies and NFTs. And they always highlight these people that are so well off. Look at these cars they're driving. Look at the houses they're driving. And then more and more people go, oh, yeah, I'll start to dabble in. And that's when things go wrong. So something I do want to touch on, which I'm going to talk more about winners and losers in a market crash, but something I just do want to reflect on is that let's have a look at that now on a 3-month basis. So obviously you can see, yep, again, we're at around that 45 grand mark here. And you can see we have those rises. We can see the significant rises that we had. And then we can see that dip to where we are now, which, like we said in that more extended one, we're right around that 40,000. So we're not much different to where you are 3 months ago. You're a little bit down, but not hugely down. And then let's zoom back out to a 1 year period. So now have a look at where the market sits here at the end compared to where we were a year ago. So a year ago, we're talking $10,000 for a Bitcoin. Now we're talking $40,000. So we're still talking a 4x return in a 1 year period. So there's not going to be many investments like that. So now obviously that just shows how volatile things are, and that then we could have a dip where we could lose 30% of that overnight. So it's going to depend when you get in as to what kind of profits you're going to make. But when you zoom out and look at some of these graphs over a longer period of time, you can see that people that invested a year ago are going to be still potentially 4x up if they had help. So, and I know there's some other, and then if we go on the all-time graph, where you can see, look at this from, only a few, we're only talking 6 or 7 years ago here, and we were talking well under $1,000 for a Bitcoin, and we can go back further, and you've heard the stories of the craziness, but you can see the volatility of here, that spike in 2017, the drop off in 2018, and you can see it's happened over time with spikes, falls, but you can see that as we start to grow to bigger numbers on a graph, these are going to look crazy, but you've got to have to remember, when did you get in and what type of return have you actually received? So I hope that's been a bit interesting to look at that. But what I want to talk about is the mindset during a market crash and your winners and losers. And this goes for anything. It goes beyond just crypto, shares, and we're going to talk about property. So all these different things that you'll hear about a market crash. So normally what's going to happen is you're going to have a market that grows over a number of years, or it could be over a short period of time like crypto can be, but say something like the property market, and you're going to hear all the time, oh, it's going to crash, it's going to crash, we're in a bubble, oh, no, prices are overinflated. This is what will typically happen on the way up. Every time something's going up, people are normally on the other hand and go, no, it's going to crash, it's going to crash. So there's always a lot of negativity on the rise, and quite often this is obviously going to come from people that have missed out. So then what's going to happen is that when the market does then crash, you're going to see a lot of, like I said, a lot of people then wanting to just jump on that front foot and go, see, I told you so. Look, I predicted this crash. There's so many, you could read an article about the death of Bitcoin, or the property market's going to crash. So just try and have a common sense mind when you see these kind of things. But you're always going to have winners and losers then in a market crash. So unfortunately, a lot of people that do lose out are those that buy in at the top, and they buy in when they're seeing so much mainstream media talking about something. So for instance, if we look at, obviously we've talked about crypto, we could use a shares example. So Afterpay got a lot of publicity when it grew from approximately $5 a share all the way up to, we're talking $100, $150 a share, I think it almost reached. But a lot of people bought in well and truly close to that top. And therefore, when it does dip by 20%, those people that bought in at $5, they didn't care because they're going, oh, well, it dropped from $100 down to 80. I'm still $75 per share up. But if someone that bought in at $90 a share, that 20% dip has really affected, and suddenly they're going, oh, I've lost quite a bit. Do you mean because they've gone, oh, I thought it was a get-rich-quick scheme. So that's where you get market and you get winners and losers in that thing. So it's going to depend on when you invest. So that's going to be a major thing of, okay, look, when do you actually invest and which part of that rise, when did you get in? Like I said, if you get it at the start and you're 4x and it drops 50%, you're still going to be well up. But if you get it right at the top and you've got a 5-6% gain, next minute we get a 50% drop, you're going to be well down. But then I suppose it depends on what your long-term prospect is. So it's a good comment here that's in the comments of you only lose if you sell while it's down. And that can be true. That's a mindset you've got to, obviously, again, there's a lot more that goes into investment beyond that. But I think what happens is a lot of people go, oh, my investment's dropped. Okay, now they sell out. They crystallize their losses such that they've taken those losses. And then they stress out and they never want to touch investing again. And not really understanding that if you're really investing, you probably are looking at a longer term mindset, unless you've got the ability to day trade or swing trade, etc., which is a lot more complex. And you probably don't want to be getting that as a beginner. But if you're looking at longer term investments, you need to look at what your investment time frame is, what your risk tolerance is, etc., and then work out, okay, how are you going to react and what's your mindset? And that's why I've got mindset during a market crash, is what's your mindset going to be if the market drops? And I think sometimes that, like I did with that graph of zooming out and looking at the big picture and going, okay, where am I at overall? And having an exit strategy. Go, okay, look, where am I? What am I happy with? What have I got? And that comes back to never investing more than you're willing to lose, because that's when you start to run into trouble. When people start to invest their emergency funds or invest more than what they can lose, you don't want to be in a situation where you can't make bills because you put it all into Bitcoin because you thought, oh, I've heard I'm going to get rich off it, which I've seen plenty of people talking about, that they've put a lot of money in and then they're going, oh no, I can't get that back. There was a message meme thing going around I read the other day, which, look, I don't know if it's true, but someone pretty much saying, oh, I invested $5,000 into Dogecoin and now it's only saying I can get 2,600 if I sell. How do I get my money back? I thought I was going to get rich off this crypto. So I think it just sums up, stop thinking you're going to get rich overnight from any investment. I think that's a really good mindset to get out of, and especially with crypto, because you can see when we zoom out, look at, people would have got rich if they got in at $100 a Bitcoin or $1,000 a Bitcoin. Maybe you're not going to see that same percentage growth at 100 grand a Bitcoin, because even if we got to 100 grand a Bitcoin from 50 grand, that's only doubling it. So there's people that got in a lot earlier. So I think you've got to be realistic when you're going into an investment. So that will really help you with mindset during a market crash. So the other thing I want to talk about during a market crash is tax implications. So I did a video about this the other day of talking about terminology that I created, which was the crypto tax trap. So what that pretty much was having an understanding that when a market dips and you're holding positions, those losses potentially aren't recognized until they're actually sold. So this is where people can get caught out, that they've sold assets along the way, made capital gains, then their portfolio drops, and that could be shares or could be crypto, for instance. And so suddenly they're sitting on a major loss overall their portfolio, but they haven't actually realized those losses. So you're going to have to pay tax on those gains, and then they might realize those losses in a future year. So if that's the kind of situation, I'd really recommend you watching that video I've done the other day, because having an understanding. Now, there's things that I will talk about in a minute that you've got to be careful with, but having an understanding of how the tax works on your investments is so important, because you don't want to be in a situation where you're paying tax on investments and not having any idea how that works, and therefore realizing that the way you structured things or the way you timed things really worked against you. So it's so important to have that understanding. And then, like I spoke about that in video, having a knowledge of where your portfolio is at all times. So having that knowledge of, okay, what positions do I hold and where are they at? What's the tax implications? What tax I'm going to be up for this year? Because obviously, if you've got to pay tax, where are you getting those funds from? That will likely come from funds that you're planning to invest, or are you going to have to sell down investments to use that if you've already reinvested some of those funds from sales? So having that understanding of what kind of tax bill you're potentially up for is really important when managing your investments. So these are all things that you've got to consider. Now, if you're going for a more longer term, you're investing in ETFs and stuff, you might not have to worry about all of this as regularly, but these are the risks you take when you're investing in individual assets. So that goes for shares, it goes for crypto, and on a more of a longer term, but it goes for property. Understanding that if you sell a property and you're going to have capital gains on it, understanding how that works. Again, if the property market crashes, understanding the tax implications of that. Okay, what does that mean? Have I got a capital loss? Am I going to be able to utilize that capital loss? So they're all different things that you need to consider during a market crash to understand the tax implications so that you don't get caught out and not really understand and next minute get hit with a tax bill that you weren't expecting. So, and then the other thing I do want to touch on that, which I'm planning on doing a full video, so keep your eye out for this. So I just want to talk about it quickly so that people are aware, but I'm going to do a video about wash sales. So quickly, a wash sale is pretty much a tax avoidance scheme that is when you're trying to sell off assets pre-30th of June that are in a loss position, to recognize those losses just to rebuy them in July, pretty much. Now, it's not as simple. There's no black and white in that, which I'll talk about more, but it's pretty much avoiding tax by pretty much selling something only for tax purposes just to rebuy it. The ATO don't like that. So I think you got a position, it's a $1,000 loss, and you sell it on the 30th of June, and you go and rebuy that on the 1st of July. The ATO, no, they don't like that. That is not on. That's going to be tax avoidance, and there's a whole article about that. So I'm going to do a full video on that one. So I've got a couple comments that are coming in. So thanks, Rod. Appreciate that. It says great work. So I do appreciate any support, any comments. At least I know that I'm reaching someone and that it's being valuable to someone. So I really love the comments I get on my YouTube videos through the week, just of, oh, look, this is really helpful, because it means I know I'm making videos that are actually helping people. So again, that's why I like people to leave comments or send me a message about what topics you want me to cover, because I want to talk about things that people find interesting. I know what I find interesting, but that might not be what the audience wants to hear. So, and I love coloring. I love doing, if it's something I don't know a lot about, I'll do some research and come back to you. So those are good. Hayden's put, low crypto money back guarantees. And yeah, there's so many schemes out there. And this is what I'm talking about of get rich. You're going to get rich overnight. It's guaranteed you're going to get your money. This is the kind of stuff that it's scary, because the everyday person has stepped into this market. And it happens with shares. You hear it all the time. It happens with property. People go in, they go uninformed. And as soon as someone recognizes that they can take advantage of people that might not have the knowledge on this, boom, they swoop in and they want to get your money. So they start selling you all these schemes of, no lose. Oh, invest in this and we're going to pay you 20% interest. And now there's no way you can lose out on it. And there was one the other day where they literally scammed a whole bunch of people and changed the website and said pretty much, lol, you guys got scammed. So really be careful where you're putting your money with, especially when you're talking about crypto. It is incredibly volatile, incredibly risky. And look, you need to do 50 hours of research, do 100 hours of research before you put down your money, or dabble with very small money. And look, honestly, a lot of people are probably treating it like gambling. And with gambling, if you're going to lose, you understand that you only put in what you're expecting to lose, because there are so many scams out there as well. And make sure you're really doing your due diligence on anything you're doing there. So I'll jump into a few of the comments I got through the week. So if anyone does have any comments, make sure you, questions, leave them in the chat as we go, and I will get to them. So this one's a little bit different to what we've just spoke about, but what should you consider when buying a business? So there's a lot of different things to consider when buying a business. It's a very broad question. So I love to talk to whoever asked this to kind of get some more ideas about what you're wanting to know. But I think you really want to consider is, one, what type and what size of business. So that's going to really change, obviously, depending on the industry and the size of the business you're looking at buying, as to kind of what kind of questions and what kind of path you want to go down. But something to really consider, because a lot of people that are buying businesses are typically buying your small mum and dad style business kind of thing, a small business. And you really want to understand is, what are you actually buying? Why do you want to buy that business? So, and what is the actual value in that business? So a lot of people go, oh, I'd like to run my own business. Okay, well, I'll buy someone else. There's a local coffee shop up for sale, or a local retail store up for sale. So I'll buy that. And what I always ask, okay, why are you buying that? What do you want out of that? What's the value in that business? And what would stop you from going, okay, well, I'll start my own coffee shop on the other corner? So you want to look at what's the value, because people always will overvalue their own business. They'll want lots of money for it because they've put a lot of hard work into it. Therefore, they expect that to pay them back when they sell it. But that's not always the case, unfortunately. I wish that businesses were worth more in that case, but it's not always going to be the case. So things you want to consider is, okay, what are you buying a location? So you might be going, I want that coffee shop. And look, I want it purely because that's the spot I want to start my coffee shop. And if I start one 3 blocks away, it's not going to be as popular, but that's where I want to be. And therefore, I will buy that business off them. So that's one of the things, location. 2, it might be brand reputation or name. So you might go, okay, look, I want that coffee shop purely because everyone knows it's good. They know they produce really good coffee. They're the best coffee in town. Or they've got really good service and really good menu, or they've got a really fancy kind of theme that they're going on there, and I want to get that, and I don't think I could recreate that elsewhere. So that brand loyalty and that goodwill of that business. So that's another thing you want to consider. Obviously, you want to consider, okay, is it turning over a good profit already? You might go, okay, look, that's producing a lot of profit, but typically that's going to drive the price up. So that's going to depend on what you're paying. So maybe that might be important to some people, but I don't think that's always going to be as important as some of these other factors when you're considering things. So they're kind of a few of the main things. And then you're going, okay, obviously maybe not a coffee shop, but you might get that with more so service-based businesses, or do they have contracts in place that I couldn't replicate? So I think that's what you're thinking of, should I buy a business, is could you easily replicate that yourself next door? So if you could go, okay, I can get this rent there and I can start my own up, and it will cost me way less because, I'm not paying for their goodwill as such. I'm just going to pay for the equipment. And okay, might be a little bit more work, but can I replicate that? Because if you can replicate that, you don't want to be paying hundreds of $1,000s for someone's goodwill. If you go, oh, well, there's not really a lot of goodwill in here. It's really just the business. So yeah, there are a few of the things I think you can consider when considering buying a business. So, and I did have one other question, which was, what makes the ATO audit you? So this is quite an interesting question. So, and I know a few people have kind of said to me, oh, am I liable for audit? First of all, I don't know. There's not going to be a black and white to go, yeah, if you do this, you're definitely going to get audited. I've heard stories of people that have gone, oh, yeah, but I did this for years and got away with it. And it's like, okay, well, do you mean that happen? And then other people that haven't done anything wrong and get an audit and get everything checked. So there are a few things that will kind of help to trigger an audit. So the ATO have benchmarking. So what benchmarking is kind of comparing you to other businesses or other individual taxpayers based on industry or your occupation, and going, okay, look, we've got we might have a accountant, for instance, and they're going to go, okay, well, most accountants are claiming on average this at label 1, this at label 2, for instance. They might go, on average for the uniform deductions, they claim an average $200. And suddenly you get an accountant that comes along and they claim $4,000 at that label. Well, straight away, that's going to help trigger. And I think these things are going to become more and more likely as their data matching happens. They're going to go, well, hang on, that looks extremely high for your occupation. So why would you be claiming that? Now, you might have a genuine reasoning. So you might be able to have all the receipts to back that up. So being audited doesn't mean you're going to get in trouble if you've got all the right documentation to back you up. But those are some things that can easily trigger it. So, and I've seen them on reports that I get from the ATO that goes, okay, this client claimed more than what we would have expected at this label last year. Therefore, please make sure you kind of double check. They're kind of saying, look, well, this isn't an official written warning or anything like that. They're just saying, look, be wary that you're claiming higher than normal for that particular occupation. Make sure that you've seen the documentation, or make sure that that's correct. So it's really kind of a bit of a pre-warning to do that. Now, I'm not sure if you get those kind of warnings on the MyGov system when you lodge your return, but yeah, that's just something to consider that could make the ATO audit you. They're completely random audits, so they may just pick your name out of a hat and go, okay, yep, we're doing an audit. Typically, these are what they call a bit of a review, which is pretty much like an audit. It's just the wording, but yeah, so it can be completely random. Can be those, obviously, benchmark things that really do that. Or obviously, if the ATO get wind of something majorly suspicious, that's when obviously an audit could take place. Obviously, that's normally going to be on a larger scale. So if there's obviously a big scheme that goes on, obviously the ATO are going to investigate that. tips them off kind of thing. These are all the things that are going to potentially go into that. And then probably the other areas that I've seen is either industry specific. So if there is an industry that they know is liable for major potential tax fraud, etc. So quite often they go heavily at industries that are heavily cash. So anything that they know gets a lot of cash in, those businesses typically can get more audits done on them, purely because you're going to go, okay, there's more chance that they're not doing the right record keeping. So I've seen audits before based purely on, okay, they're in an industry that typically receives a lot of cash money in, therefore are they declaring that? What systems have they got in place to avoid that? And then another bit of an odd one I've seen before is employer audits. So what that is say someone works, and we're going to use a big example here, come everyone knows, say someone, Telstra, and they go, okay, we've done some investigating with Telstra and we know what their employees have to spend for work. So we know, for instance, they might go, every Telstra employee gets their own work car. We give them company cars, therefore no one uses their own cars. And they're going to go, okay, well, I've got an employee here who's claimed 5,000 kilometers for their motor vehicle expenses. So straight away, sometimes they have those where they've done that hard work with a business and go, okay, what do your employees actually use work-related? What could they actually claim? And therefore, if they claim something else, straight away, that may flag it. So I have seen that before, and I've only ever seen it once or twice where it was like, okay, a particular company said, okay, they won't need their work phones. We give them a work phone, therefore they do not use their phone. Therefore, anyone that's claimed phone, it was potentially going to trigger and go, okay. And I think they sent it out from memory to the tax agent and said, if you've got people that work for these employees, which they had kind of given us a list based on obviously a tax agent list of which ones were clients, and go, okay, these ones, make sure they're not claiming these kind of things. So yeah, like I said, there's quite a few different things there that could trigger an ATO audit. And that's why it's so important, because like I said, that one thing of it could be completely random. Therefore, keeping your documentation, keeping your receipts, doing all the right things is going to make sure you're covered. And then just being realistic. If you're only claiming what you actually should be claiming, this will never be an issue. But those benchmarks are really important, and having an understanding that if you're going outside of what a benchmark might be, you need to make sure your documentation is really, really thorough and really explains it, because they're going to go, well, that's very different, and why, what, like, make sure you understand, okay, because in most situations, if you are completely different to someone else that's doing the same job as you, there should be a really clear reason why. So for instance, if you do an occupation where there would normally be zero travel, but you're wanting to claim a lot of travel, there should be a really clear reason why you're doing that. And that there may be a genuine reason, but obviously if there's not, that's going to put you in a lot of trouble there. So I do have one more comment that's come through here. So is claiming a somewhat significant GST credit in the first year of business a red flag to the ATO? The GST credits are legitimate as a lot of capital assets for business use were purchased. And so I wouldn't say it's a red flag, but I definitely have had calls from the ATO before to go, look, this person's claimed a lot of capital assets, and why are they getting such a big refund? And normally they'll just want to see the receipts for it, kind of thing. So it can be a bit of a red flag, probably isn't the right word, but it can be kind of a trigger, like I said, benchmarking to go, okay, that's a really high GST refund. What's the go? But typically a lot of businesses that start up, they'll have a lot of capital expenses. So normally it's a lot of equipment. They may have to buy motor vehicles. They may be buying farm machinery, for instance, for a new farming thing or things like that. And therefore they may have very minimal income in those first few quarters. So therefore getting GST refunds, which may seem a bit odd, but as long as you've got that backup, especially around capital assets. So make sure you've got the receipts, they've got the right documentation, you've got the right ABNs, right names, all that kind of stuff on it, then that'll cover you, because that is quite common that a BAS audit, for instance, so that's where you lodge your GST through, is you might get a call from the ATO and go, look, can you just give us the receipts for these capital purchases? We just want to see the ones for the big purchases that make up the bulk of that. So it definitely can be something that can raise a ATO inquiry as such, but definitely there's nothing wrong with it. You can claim the capital assets. The genuine business expenses, generally there's a lot of capital assets that can go into, especially in some industries where you're going to have to buy quite a bit of equipment to start up. So it's generally genuine claims. And like I said, if you've got a genuine claim, you've got no issues, but you may have to answer that question to the ATO. So that kind of wraps up the questions we've had. So we've had a few, which is good. So I've said I'll be doing a video on wash sales this Sunday. Hopefully it will come out. We're quickly approaching tax time. We're only 4 weeks away now, pretty much from the 1st of July. So my life's about to get a lot busier, which is exciting. I love that because I love helping people. So make sure if you are looking for an accountant, check out my website, Rooshock Accounting. I've got crypto tax packages. I do normal tax returns. So should have the pricing on there, I believe. So it'll be for a basic tax return, $79. So, and I've got a few other, and obviously if you run a business, would love to have a chat. I've had a few conversations over the last week, a few different business owners, and I really love doing that kind of stuff. So I appreciate everyone that's tuned in, and I'll be back here for another live next week. See you then.